All right, it's all about oil. But first of all, let's start off with the markets now. The U.S. markets, Dow Jones Industrial Average in bearish territory. Markets just opened not too long ago. The S&P 500, don't forget that psychological level at 5,300. We are below that. And then the NASDAQ, tech-heavy NASDAQ, 16,821. That's down as well. We are waiting, of course, the big numbers on the jobs, U.S. jobs in the month of May. How many were created? What does that mean for the Federal Reserve and monetary policy path? European stocks, well, they've remained in bearish territory throughout the day. It looks like the skepticism is spreading across the Atlantic. Euro stocks, pan-European stock 600, down by 21 basis points. So is your FTSE 100 over in the UK, where we've got that big debate coming on later on at 9 p.m. I'm so excited for that debate. I love debates. DAX over in Germany, 50 basis points down. Your CAC 40 over in France is down as well. Rishi Sunak and Keir Starmer, they're gonna get it on this evening. All right, oil prices. This is our subject of the day, of course. Oil hitting a low, 4-month low. West Texas Intermediate is 72.85. Brent crude 76.98. How about that? Natural gas also down as well. Now, don't forget, recently we had OPEC Plus announcing an extension of their cuts. So basically, currently where things are now, the cut is about 5.86 million barrels per day. That's about 5.7% of global output. They had a meeting over the weekend, I think it was Sunday, where they said that so there's two sets of cuts, right? 3.66 million barrels per day of cuts expiring at the end of 2024, and another voluntary 2.2 million barrels per day expiring this month. And that 2.2 million is by about 8 members of the cartel. Now, they've decided to extend the 3.6 million barrels per day till the end of 2025. And then the voluntary cuts for those 8 members to the tune of that's extra 2.2 million barrels. That's been extended to September 2024. But oil is falling. Why? Well, let's head to Rome, where we're going to be joined by Dr. Carole Nakhle, who is the CEO of Crystol Energy, founder of Access to Women in Energy. She joins us now to discuss further. We also got a quote from the Saudi energy minister. Going to get to that in a moment. Dr. Nakhle, thank you so much for joining us. Good to have you again on the show. Good afternoon to you. So how would you, with oil prices falling, I guess with the OPEC plus the cuts, how do you see these latest developments?
Hello, Rotus. Well, look, there is, despite nothing else in the market has changed significantly except the OPEC Plus meeting. And while many expected an extension of the cuts, we have to distinguish between two things. There are different layers of production cuts that OPEC has introduced, the voluntary cuts and then the official cuts of the group. The official cuts amount to 2 million barrels a day, and those have been, and they were introduced in 2022, and they've been extended till December 25. So they extended by another year. And that by itself reflects that OPEC Plus is not really expecting a tight market this year, unlike the kind of perception that we got. Under the voluntary cuts, we have to distinguish between two sub-layers. One of voluntary cuts introduced in April 23, and they amount to roughly 1.65 million barrels a day. And those were also extended to December 2025. So in that respect, cuts have been extended. But there is that controversial cut of 2.2 million barrels a day introduced in November 2023. And then they include the lollipop the Saudi government offered to the market. And those would be extended only until September this year. And then as of the fourth quarter of this year, they are going to be relaxed according to a monthly schedule. So how do I read that? I read it as simply putting more barrels in the market. And that by itself has sent bearish signals to the market. We are seeing the market already reacting to such additional barrels in the market at a time when demand is not really growing rapidly and the economic situation is still uncertain. And add on top of that, the additional 300,000 barrels a day that the UAE got as of January next year, 2025. So the net effect is more barrels in the market, not in a year, but within a few months from now.
Thank you so much. This is why we are happy to have you on the show, to break these things down for our viewers. There's a quote from the Saudi energy minister. I want to read it to you and I guess ask about this relationship with interest rates and so on and oil. He says, quote, "We are waiting for interest rates to come down and a better trajectory when it comes to economic growth, not pockets of growth here and there." This is Prince Abdulaziz bin Salman. How do you interpret that in relation to where oil prices are?
Unfortunately, the market would definitely be nervous when they read such a quote, not because of the quote itself, but because it has to be put in the broader context of OPEC forecast, their own forecast for demand this year, because OPEC has been the most bullish in its forecast among other industry observers. Even if we compare their forecast with the International Energy Agency's demand forecast, there was at least 1 million barrels a day difference between those two forecasts. So when I read this kind of quotes and when I see what OPEC Plus has announced, then it raises some question marks about whether OPEC has overestimated demand growth. But mind you, to be fair to them, they are not the only one who kind of, not I would say overestimated demand growth, but this economic situation, because many financial institutions at the beginning of this year, they expected several cuts in the interest rates. They underestimated the challenge that inflation brings to any economy and how difficult it is to get the inflation down to a certain target. That's what we call the last mile, is actually the most challenging. So that by itself is concerning for global oil markets, but also don't forget China. China is not roaring back with vengeance. The Chinese economy is showing some structural problems that will take some time to address and require more government support than what you have seen so far.
Thank you so much. I like how you're linking everything together. It's all interconnected. So we're in June. Summer is here. You've mentioned inflation, how things, that last mile and the sticky part of it. How do you see oil demand? I mean, there's, road trips, I guess, in the United States, maybe holiday flights, people booking flights, traveling here and there. Does that factor into the demand equation for oil prices as we get into the summer season?
Definitely they play a role because, for example, if we look at the largest oil consumer in the world, that is the US, you would expect gasoline demand, which is a derivative of oil products, of crude oil, to pick up during what we call the holiday season or the driving season. But when we look at the figures, the data coming from the US, we see that the demand is actually not as high as one you would have expected at this level. And this confirms that actually consumers are thinking twice about their spending pattern. And you have to take into consideration, I don't want to link it only to 1 year or 2 years ago, but to COVID, government support during the COVID pandemic. People received cash handouts and they have spent those cash handouts. And now they're spending kind of those cash handouts is over. So they are more cautious in an inflationary environment in terms of how to spend the money. So yes, we are heading towards usually a natural season for a higher demand growth, but it's all relative. We have to see by how much that demand is growing because of the holidays and the driving season.
Thank you so much. Just one more question for you. Turning to geopolitical matters now, there's a ceasefire offer on the table for Israel and Palestine. The U.S. President Biden has talked a lot about it. We haven't heard much as to whether or not it'll be agreed upon. This conflict, is there any impact at all on oil prices from your vantage point?
Isn't it ironic that it's not just what's going on now in Gaza, and hasn't been a ceasefire yet, but there is also, there's a war in Gaza and there is the ongoing war in Ukraine. There's all sorts of geopolitical problems around the world with sanctions on major producers, including Russia, but also Iran and Venezuela. And still oil prices are at this level. Now, does not degrade the level of geopolitical risk. It can always worsen. The situation can always get worse. But we have not seen, on the one hand, supply disruption. So we did not lose supplies. And that's why if there is a ceasefire in Gaza, it will not really have a major impact on oil markets because the markets did not lose oil because of that conflict. And the instability in the region that many people feared would spread has has been more or less contained. At the same time, so there is also the spare capacity in the system because of OPEC plus cuts is quite high. It's well above the 5-year and 10-year average. And that by itself has dampened the geopolitical risk premium on oil markets.
Fantastic. Dr. Nakhle, actually, I can squeeze in one more quick question. What's your outlook, I guess, for the second half of the year in terms of where oil prices could go?
My outlook has not changed from the beginning of the year because I did not share the enthusiasm of some of the bulls of Wall Street who were talking about the 3-digit oil price. Again, I may be wrong, and that's something I would caution against making any predictions about oil prices, because if anyone knew where oil prices were heading next, they shouldn't be talking about it publicly. They should be already retiring on a very rich island somewhere in the world. But really, when I look at market fundamentals so far, even from the beginning of this year and even from last year, I did not see strong fundamentals that would point into this 3-digit oil prices that some have predicted, I would say prematurely. And then add to that, it's not just OPEC plus supplies that is in the market. There's also very strong growth from outside OPEC plus led by the US. So when I try to balance all these factors together, I think what we are seeing in terms of oil price is just a reflection of the market fundamentals on the demand and on the supply side.
Dr. Carole Nakhle, CEO of Crystol Energy, also founder of Access for Women in Energy. Thank you so much for talking to us. Really appreciate your time.